speaking of Richard Lipstein, he joins us now here on set, Managing Director at Boyd & Global Executive Search, a firm with a particular focus on the financial sector. And we should also point out that Richard's the chairman of the Career Development Committee of the New York Society of Security Analysts. Thanks so much for coming in on this very muggy day here in New York City. Our Sue Keenan, you just heard her. She said that Bloomberg News has uncovered that leverage is back and it's the bankers who have it. Is that a fair assessment?
Yes.
What happened? Why the turnaround?
Well, what happens is Wall Street has tremendous financial leverage as companies. They go from tremendous profits to break even to losses to tremendous profits again. And when the products that are hot come back in favor, the people who can generate the revenues because they're experts in those products are the ones that get hired, and we're now back to a buyer's market.
What are folks telling you? What are you hearing from people about these exorbitant pay packages that Sue just mentioned? $8 million, and that doesn't include bonuses. Is that what we're seeing now? Is it back to the future?
Well, in limited cases, yes. Wall Street rewards those who have the relationships, who can generate the revenues, who have the expertise in the particular products. And Wall Street people are paid as stars.
Yeah.
If you've got the capability of generating the revenue, you are in demand not only by your own firm to stay there, but by others. And I think we're starting to go through that process right now.
And we should point out that this is not something that just happened overnight. This interest started to build slowly last year, did it not?
Well, what happens is when the stock markets go up, it leads to any number of things. Company valuations go up, both public and private. So you have an increase in M&A. The private equity firms are dying to unload as many of their companies as possible, either by selling them to other financial buyers or strategic buyers or taking them public. So that leads to an increase in the IPO market. So it all starts with the stock market valuations going up.
Richard, you have a couple of hot areas that you can point out for us. Tell us which ones are really hot right now.
Well, risk management has been hot. I think we're sort of in the second phase of it. What started as the need to expand risk management capabilities on the part of companies for their own balance sheets is now starting to expand into the deal business.
And let's differentiate risk management between corporate risk management.
Yes.
What's the difference?
Well, the difference is the company wants to be careful about what kind of investments it makes, what kinds of things it takes on their balance sheet. You know, risk management for deals, if you're going to participate in a leveraged finance transaction, you want to make sure you've dotted the I's and crossed the T's, so that if any monies go in or you make any representations, you want to make sure that it's a good deal and that there's no stone that's been unturned and you're not going to be embarrassed later.
What about equity research?
Equity research has also gotten hot for any number of reasons, particularly having to do with the increase in stock prices.
Yeah.
There's opportunities to make money in research, sales, and trading. Although it's a challenge profession, there are any number of companies that are getting into it or expanding into new areas. Financial institutions is a hot area because, for obvious reasons, all the deals that will happen, all the investments that will be made.
And any examples you might be able to point to? I'm thinking of the first Guggenheim Partners. That's one thing that we were seeing.
Yes. Well, Nomura hired a well-respected brokerage analyst, Glenn Shore from UBS. He's going to be head of the financial services effort there, so he'll be, I'm sure, building people under him. Cowen is a firm that has gotten in the financial institutions business as a way to leverage their emerging growth capabilities. In a lot of ways, the banks are similar to emerging growth. A lot of M&A, a lot of public offerings, a lot of private investments.
Then, Richard, you watch these numbers, these metrics as a professional. Are you surprised now at the speed with which it seems to be picking up?
Well, I've been doing this for over 21 years.
Yeah.
I may look younger, but I've been doing this for 21 years. It doesn't surprise me. I think once the markets come back after a trough in the deal business and in the stock market prices, Wall Street tends to expand before the real economy. And what happens is the real economy has to expand for the Wall Street growth to continue.
And in about 20 seconds, we've been talking today about unemployment figures and about some of those numbers still up near 10%. Is Wall Street going to drive that number lower?
I'm not an expert in terms of what percent of employment Wall Street represents in the United States, but clearly I think the Wall Street employment figures will look better.
Yeah.
The hope is that the rest of the U.S. economy improves as well.
All right, Richard Lipstein joining us, Managing Director, Boyd & Global Executive Research. Always good to have you on. Thank you so much. Appreciate it.
Thank you.